Chris Lenz, the CMO at GreenGrowth CPAs, and welcome to the GreenGrowth CPAs YouTube channel. Today we're launching a new series, CEO Spotlight. It's interviews and one-on-one conversations with C-suite leaders and in the cannabis industry, operators, investors, and ancillary service providers. And today we have a very special guest, George Mancheril, the CEO and founder of Bespoke Financial. Thank you for joining us, George.
Happy to be here. Thanks, Chris.
Yep. And we invited him here today because he and his company offer a solution to what is perhaps the biggest obstacle facing cannabis companies. That's access to funding to grow their business. And through our outsourced CFO service at GreenGrowth CPAs, we've worked with a number of Bespoke Financial's clients to help set up the financial and reporting systems so they can produce the financial statements and documentation needed to access these key credit lines. So today we're just going to be talking about just giving general information to our audience of cannabis operators about the kind of information they need to be able to produce and what they need to access the credit lines that are so essential. So, all right, first, why don't you give us a little background about Bespoke and when and why you founded it?
Sure. Yeah. So, Bespoke Financial was founded in June 2018. Prior to co-founding the company, I'd say I had a very traditional finance career. I worked at investment banks like Goldman Sachs, and later at investment management companies like Guggenheim Partners Investment Management for most of my career prior to this. Always with a focus on structured credit, lending to less liquid, less developed industries for the better part of 12 years or so. So that was kind of where my background was within the finance industry prior to this. In 2013, I moved to LA, so was very aware of the cannabis industry. And then as recreational or adult use cannabis was set to turn on, I'd say there were about two core beliefs that I had that really motivated me to leaving my previous career and co-founding Bespoke. The first is, I think cannabis in a number of years will operate and resemble any other mature consumer product industry that exists today. People like to compare it to alcohol, tobacco, or pharmaceuticals. And I think any of those are legitimate comps. And if you look at any of those markets, they're all reliant on functioning debt financing and debt capital markets to allow these businesses to operate. And so if you believe that cannabis will ultimately get to that future state, then it's obvious that lending was a huge need for this industry that had not started just yet. The second core belief, I'd say, was really just driven based off of my experience in structured credit, where if you think about what structured credit is or middle market lending, these are, capital sources and investors that target industries that don't have the same access to capital financing as very mature, larger institutions. And what became clear is that by moving into a less liquid space as a debt investor or as a lender, you basically position yourself to have an exciting opportunity. You can structure deals that are more attractive from a risk return profile. And you're able to basically enable that industry or company to grow and excel. So, with both of those pieces in mind, we had core conviction that ultimately someone or a group of people would have to develop this debt financing part of the world for cannabis. And we just thought we might as well lead the forefront so that we could not only build expertise in the industry, but also help enable this entire space to grow from its nascent stage, which is oftentimes the most critical for any industry that you talk about. So I'd say those were the two primary motivations. Obviously, it was a pretty big departure from what my career had been previously, but it's been very exciting and I'd say very inspirational in terms of the different entrepreneurs that I've met and the other different sorts of ancillary service providers that have sprung up to help this industry along.
That's great. Explain to our audience real quick why there weren't these debt financing offerings previously.
Yeah, I mean, I'd say, cannabis is very unique in the sense that there's a regulatory dichotomy between the federal level and the state level. Obviously, there's, numerous states now that allow for adult use or medicinal cannabis to exist. But from a top-down federal perspective, it's still on the Schedule 1 of the Controlled Substances Act. It's still considered to be illegal. across the country. And what this does is basically prevent vanilla services and sources of capital that are available for any other industry from really diving into cannabis. And so there's really no way around that, right? If you look at from a financing standpoint, there are investors that oftentimes just have morality clauses. They're not allowed to engage in vice industries, or they just outright don't deal with anything that's considered an illicit substance. And so there's a lot of interest in capital that's left on the sidelines. As much as they may believe in the industry's prospects and as much as they may like the risk return profile, they just have their hands tied from a regulatory basis. And so that hurdle is very hard for any institutional investor to get over. But there are more flexible pools of capital, that oftentimes can be a first mover. And so for us, the idea was, let's go and aggregate that as much as possible and really just start learning about the industry and deploying capital as quickly as possible. One, because the industry vitally needed it, especially in the later part of 2019 and 2020. But, even more so than that, it's, our prospects and our goal is to really be a financing partner for this industry on a going forward basis. And if that's the core thesis, then there's no need to wait on the sideline. And over time, it was our belief that those regulatory hurdles will come down, either all at once or in a series of regulatory changes that make it easier for that capital to make its way to this industry.
Yeah. We're all got our fingers crossed, hoping that'll happen soon.
Yep.
So one of the things we encounter in the space a lot is, and I think rightfully so, a lot of cannabis operators just have an incomplete knowledge of the kind of options available, partially because these things like what you do haven't been available. Can you explain the difference between, I feel like the most common funding sources talked about are VC or angel investing, this equity financing type option. So what's different about what you guys offer?
Yeah, so for us, we look at the industry from a very different lens than I'd say VC money or equity investors. And that's, very true of how debt investors look at something different than equity investors. For a lender, what you want to ensure is that you're lending to an established organization, one that understands its business prospects. And also you understand that if things go bad or if deals go sideways, that there is some collateral or security interest that you have in there to be made whole. Equity investors in VC, they're oftentimes focused on the future prospects and the future upside in any given operation, which is, an entirely different investor profile and risk profile than what a lender has. What lenders really focus on is, at its core current state, does this business offer enough positives and enough pros in terms of its operations and its assets that make us comfortable putting our money at risk. So it's just two different ways to look at it. It's oftentimes, the future for this industry, I think, is spectacular. I think there's a lot of untapped demand. I think there's a lot of consumers that are making their way and trying cannabis now that it's becoming increasingly legal across the country. And I think there are huge portions of the population that really haven't considered cannabis that will in the future. So there's definitely that growth potential that gets equity investors reasonably and quite accurately excited. But as a lender, that upside really isn't part of the picture for us. What we want to ensure is that the business we're working with right now is stable and is able to continue operations and ultimately honor their obligations when it comes to the lending contracts themselves.
Okay. Yeah, that makes a lot of sense. And, really brings to light the idea of the working capital. It's the capital you need in a short term to operate your business, to grow your business, and not necessarily this 10 to 15 year down the line.
That's right.
Kind of view. So when you're working with cannabis clients and they're coming to you, what are the most common sort of issues that they're looking to solve or that you help them solve?
Yeah, I mean, it's interesting. We've been actively lending to this industry for, over 2 years now. And it's funny, as the industry matures, there's different sets of challenges that tend to pop up. When we first started, in 2018, 2019, especially in the California market, I'd say the number one pressing challenge was this long cash flow conversion cycle. So you could have a successful business, you could be selling product to dispensaries, but ultimately you weren't actually collecting any cash for 100 days, 120 days, maybe even longer than that. And As a business that depends on cash flow, that puts a serious impediment on your growth and your ability to operate. So when we first launched, the main problem we were trying to tackle was this idea of how can we help these companies access capital and tighten that cash flow window as much as possible. And so we launched with our invoice financing product. As the industry matured going into 2019 and 2020, it flipped. The industry did a great job in terms of, basically asking their customers to either make do on their obligations or they walked away from bad relationships. It doesn't make a lot of sense selling a lot of goods to someone who ultimately doesn't pay you. And so that became a challenge that the industry got much better at managing. But now the challenge was on the flip side. Because there was so much more demand and because there was so much more product being produced, you had a hard time as an operator really sourcing your raw materials sometimes. Cultivation, product being harvested. Last year, it was definitely much harder to source supply. You had to be willing to show up to a cultivator, have money in hand, and be ready to put down deposits or make a payment COD in order to secure those raw materials. And so our products then, we introduced inventory financing and purchase money financing to really help address that need so that companies could firm up their supply chain. And then now where we sit today, it's a mix of all that. It's a challenge. Any business, you have to manage sort of how you're sourcing your raw materials and inputs, how you're managing your cash flow, and then how are you managing just general business expenses. Obviously taxing in this industry is a big concern. And so, I think our products have continually helped address this industry's core need, while offering enough flexibility and not requiring any sort of dilutive equity component that lets these companies feel comfortable in that they're getting access to the capital they need to really continue operating their business. And then oftentimes streamline and make more efficient how they operate. Just because you have an easy enough time sourcing packaging, one thing that operators have become very aware of is that, economies of scale really do help you push towards profitability or increase profitability. And so even if your current logistics were working fine, the conversation we have with operators is, okay, with increasing your working capital, how can you help improve your unit economics? How can you help tighten up your logistics? And so we oftentimes take a very consultative approach when it comes to companies that we're speaking with and really do try to understand their unique business model in the larger context of the industry. And with all of our clients, there's a variety of different ways that our money helps them enable growth and introduce efficiencies that otherwise wouldn't have existed.
Yeah, absolutely. The economies of scale, the margins are so slim in the cannabis industry as it is now that, that's really the next step towards profitability and really building these big, successful entities. You mentioned a couple, so let's dig in on the core services you offer, and then if you just give me a really brief sort of explanation for the four main. Let's start with invoice financing since you mentioned it.
Sure. Yeah. So, like you said, we have four main products that we offer to the industry. They all operate effectively as lines of credit with different use cases for our money. So the first product we had launched with was invoice financing. It's very useful for companies that, like I said, have a long cash flow collection window where you're selling product and you're not collecting payments from your customers for 3 months or beyond. With our invoice financing product, we will advance funds to operators on an invoice by invoice basis against their accounts receivable. So we allow them the ability to access the majority of their capital that's sitting in AR upfront, use it for whatever expenses they have or reinvesting it into the business, and ultimately allow their customers the window of time that they need in order to pay them. This started off as purely a tool to address a problem, but it's recently evolved into being a very advantageous selling tool for these companies as well, whereby you can effectively go out to your customers and quote them, a variety of prices or a schedule of prices. So you could say, there's a COD price, which is just your basic price, and then a net 30, net 60, net 90-day price that incorporates what the financing fee would be, but ultimately gives optionality to their customer as to when they would pay, and correspondingly not create an impediment for our borrower or the seller or vendor in that case. So that was our first product. Our next two products are very similar, purchase money financing and inventory financing. Both of those help address problems on the other side of the balance sheet. So if you have vendors that have very tight payment deadlines, or if you feel that by increasing your purchasing power, you can help improve the profitability or economics of your business, with our inventory and purchase money financing, we'll advance payment directly to your supplier for purchases of raw materials and allow you that window to, again, not only streamline your operations, but maybe you see a growth opportunity moving into a new market. Maybe you just decide that by entering into a more scheduled supply contract, you can actually reduce costs. This is something that was very clear, especially when it comes to packaging goods. Oftentimes companies do have to run their logistics on a very ad hoc basis. So, as you need more containers or as you need more packaging, you're putting in a rush order into your supplier overseas. And in order for that product to get to you in a reasonable amount of time, it has to go via air. And all of that is very additive to the cost. Versus if companies have our lines of credit available, they understand that they can enter into now a 6-month consistent contract for supplying their packaging, which can come over by cargo ship. You already reduce your cost and you already reduce your inputs, and it lets you forecast your business's growth in the future much better. So again, those two products are really meant to help on the sourcing side. Our fourth product is just a general line of credit. It's, I'd say, the closest that the industry has to the financing sources that a non-cannabis industry would have readily available to it. It's a general line. They can call capital either directly if they want to manage internal expenses or tax payments, which can be quite chunky on a quarterly basis, or they can use it very similar to the inventory financing, where they're using it to pay their vendors or pay their suppliers. Ultimately, all four of our products are, graded and available based on the maturity of whatever business we're evaluating or speaking with. But at the end of the day, the end goal of all of them is really to enable these operators to do more with less. And we've definitely had great success in terms of partnering with companies. And I think nothing speaks more to the success of, our product fit than the fact that, our clients oftentimes are, the conversations we have are, we turn them on for $1 million line of credit. And through the growth of the industry and the growth of their business, our conversations in a couple quarters are really more about how do we increase that limit going forward, because their business has grown so much that we need to increase our financing commensurate with that. And I think it speaks very, very much to the fact that we're addressing very vital needs in the industry.
Yeah, absolutely. I mean, just the flexibility that you can offer as far as that building and strengthening a supply chain, or, an issue that we address a lot is that those credit terms with your vendors, and how much flexibility that can give you, and how much your vendors who are also struggling with cash flow issues can really appreciate getting real friendlier terms, maybe, and the quicker turnaround. So. Yeah,
that's right. Yeah. So similar to how, our borrowers are using our invoice financing, us giving our borrowers purchasing power and being able to go through their vendors and basically negotiate, prepayment discounts or volume-based discounts just because they have the capital in hand. All of these are very additive to the bottom line.
Yeah, that's great. So to all of our cannabis operators out there, if they're coming to you looking for a credit line, what are you looking for as traits as a company, and then what are you looking for on the financial side as well? What tells you that this is a good opportunity?
Yeah, I mean, I'd say in general, this goes back to our earlier point. Building any industry from the ground up is rife with challenges, and building a company in a highly regulated environment has its own host of difficulties and challenges. And so when we evaluate companies, what we like to see from the outset is a management team and an internal vision that is very clearly defined. I think a lot of the challenges that the industry faced in 2018 and 2019 was operators that spread themselves too thin. They focused on 8 different projects going in 8 different directions, and there wasn't necessarily any synergies in between those initiatives. And so what that ends up doing is you wind up not executing any of them very well, because your team and your bandwidth is just so diluted across the different avenues and paths forward. So for us, we like seeing businesses that have a core vision, that really hammer down and focus on execution. The more they can demonstrate an understanding of the economics of their business, the more comfortable we feel in terms of providing capital and putting it at risk. Stability in operations, stability and experience within the team itself. I'd say all of those are very, very apparent after you have a couple conversations with any company, whether it's a very professionally run company with a longer term vision of establishing themselves in the market as it continues to grow, as opposed to what oftentimes does exist in the space. It's an idea of a company that's really meant to front run regulatory change. So you're not building internal controls and procedures for a 10-year plan. You're building it for, the next 2 to 3 years with the understanding that if federal regulation changes, it'll be a windfall for everyone. And I think all of that becomes very apparent. The past couple of years have been rife with, a couple different surprises, both for cannabis and for the world in general. And there's no way companies really can survive or even excel in those circumstances without having key controls in their business and in terms of what they're trying to achieve on a daily basis. So that, I'd say, it's not necessarily quantitative measures, more qualitative. And I think, very, universal in the sense of what you look for in a good business before any lender decides to work with a company. Financially speaking, again, we don't focus on providing pre-revenue or startup capital. We like working with existing businesses, and the versatility of our product offering means that we're usually able to offer at least some solution to applicants that approach us and discuss how we can, really tailor it to fit the specific needs. But I wouldn't say there's a minimum criteria or minimum thresholds that we look like. Oftentimes, we look at what the current state of the business is and begin a relationship, then ultimately allow them to increase the amount of financing or migrate to different products based off of the progress that we see the company making.
Yeah, absolutely. So that's a really good point, that you're not startup capital so much as it's that idea of the working capital. So similarly, for the startup, that VC kind of thing, you need your pro formas and you need some financial projections, but you guys are actually looking for, initially to get the credit line, you need to have up-to-date financials, and then you do your monthly surveillance, right? So you need monthly closes and then a regular delivery of financial statements. Is that right?
That's right. Yeah. And, it's interesting for us, the fact of companies being able to produce financial statements that, make sense and tie out, speaks very highly to how the business is being run. So oftentimes the biggest time lag for us when we start speaking to a company for the first time is receiving those materials. Because for us, that's the cleanest way to understand how the business is operating. It's one component of multiple components that go into our review process and approval process. But the ability for these companies to state that, they are keeping an eye on their business, that speaks volumes and definitely gives us a great deal of confidence when we continue the conversation.
Yeah. How often do you run into trouble with people producing those kinds of statement, that kind of information, especially regularly on that ongoing basis?
It's gotten better, I'd say, but it's definitely a challenge. And I don't think it's anything nefarious about the industry itself. I mean, the vast majority of this industry is full of small to mid-sized enterprises, right? These are not large corporations. They usually don't have a dedicated finance team or an accounting team. And so I get it. There's a lot that goes into running a business. Your attention is needed in a multitude of different areas. What I would say, though, is, it's very important for you as an operator, for you as a leader of a business. You need to have, good accounting and good, real indicators of how your business is performing for you to really understand where you can improve and what you need to address and what you need to get ahead of. So it definitely is an understandable challenge. There's a broad array of, companies that approach us, and, we're just floored at the professionalism of their statements. Oftentimes they do tend to work with an outside accounting firm similar to GreenGrowth, just because, they don't have the resources internally, which is completely fine, oftentimes even preferred for a lender like us. But at the end of the day, if you can't produce anything, or if your numbers really just are incredibly volatile, or, you have balance sheets that don't add up, that's problematic. And I'd say more so for the operator than anyone else, just because it's hard for you to make good decisions without good information.
Yeah, that's one of the sort of really key messages that we try to get out to. So, we work with your clients on that outsourced CFO side, helping set up the processes to produce those financial statements. And a lot of folks, let's say it's a cultivator who's incredible at growing this product. It, is a master in that specific field. It's why they got into the industry, but they're not necessarily, and we don't really expect them to have that advanced understanding of financials, of why this information is important. And, the one thing we really want to get across is that, getting set up with that, with those financials will help you get that line of credit, but that's just the start of the benefits. You get information about your business that you could, helps you optimize, shows you where your weaknesses are, where your strengths are, and helps you build the whole thing out. So, do you have anything to add to that?
Well, I mean, it's a variety of different things, right? Obviously, like on top of everything you said, I think, one of the things we try to convey is that companies really do themselves a disservice if they don't invest in actual professional accounting and good internal controls to make sure their financials are up to date, because you can do all this work and you can have a great product and you can have a great market presence. Ultimately, if you're focused on growth, you're going to need capital from a lender, from an equity investor. Whatever existing partners you have are going to want to see evidence of your success. And if you're not in a position to really present those numbers in an accurate and streamlined way, then you're not really taking advantage or highlighting all the success that you've had and enjoyed. So for us, we look at it and it definitely closes doors if this isn't something you invest in. It definitely sets you back from an opportunity standpoint. For all these reasons, again, it's not additive to your revenue. It's not going to increase you on like the statewide sales number, but from a business standpoint, it's hugely important, and it's something that's very easy to get scuttled to a low priority, but they really shouldn't. It's more costly in the long term than it is, and that's the other thing. The sooner you start, the easier it is. Like the longer you wait, the more you have to untangle, the more you have to struggle to remember what happened, 3 quarters ago and get it down into your books. And it just becomes harder and more of an uphill climb the longer you wait. So, I'd say the sooner you can make it a priority, the better for you, and the better you'd start seeing, positive, returns from that investment of your time and energy.
Yeah, absolutely. And then the other thing too, which isn't necessarily something you're so concerned with, but it also helps with tax compliance and tax planning. Getting that monthly statement closed, you can optimize for 280E and cost of goods sold. And the way we frame it is it's an investment that pays for itself. Like you said, it may not be in the front end, you may not be seeing that, but in the long term, you're going to save on your taxes. You're going to have access to capital, and your operations just going to be running a lot smoother in general.
Yeah, and for me, anytime I can, sort of ideate or discuss something with a professional in the industry, I have obviously always walk away with some much greater degree of confidence in terms of the decisions that we make and how we operate. And so these are resources that honestly operators should take advantage of if they're not in a position to really invest in having a controller and a CFO and someone who's dedicated to this in-house. The point being that you just can't have nothing. Because if you do, just based off of how this industry is growing and the pace of change, I'd say, is accelerating every day, you really don't want to be left behind. And this is one of the most obvious ways that we see companies really short sell themselves.
Yeah, and it's an easy way to gain competitive advantage in an increasingly competitive industry. So for you guys, you're based in Los Angeles, but what's the sort of geographic spread of your clients?
Yeah, so we're live in 11 states across the country. So our client base really spans, California, where most of the team is based, all the way out to Massachusetts and Maine and states in between. So, we're live in a variety of states. Right now, I'd say our coverage is 80% of the entire U.S. cannabis market. So chances are, no matter who's seeing this, if you work in the cannabis industry, Bespoke is in a position to work with you. And so our geographic focus is quite broad. It has given us a really good understanding of the various different cannabis environments and markets that exist across the country.
Yeah, that's one of the sort of low-key, extremely important nuances of the industry is how different each market is, and even down to the micro market of different cities and localities, because it can have all those different things. So that's great. What is sort of breakdown as far as verticals, where you spread pretty evenly across the board, or?
Yeah, I'd say pretty evenly. our clients right now really do span the entire gamut of the supply chain. We work with everyone starting with cultivators down to dispensaries and everyone in between. Oftentimes, it's pretty rare in this day and age to really deal with a cannabis company that holds only one single license. Oftentimes there's some element of vertical integration that's happened because it's additive to their economics. But yeah, and when it comes to plant touching companies, we work with the entire gamut. But in addition to that, we do also finance non-plant touching ancillary companies. So, brands that really don't touch the product, but work with licensed operators, ancillary service providers, be marketing firms, outside CPA firms, really a whole host of companies that help support the industry. And then we also do work with a handful of hemp-based companies as well, just because they oftentimes just get lumped into the cannabis market and don't have the same access to services or capital that a non-hemp, non-cannabis company would have. So I'd say our client base is definitely pretty diverse when it comes to the industry and from a broader perspective as well.
Yeah, that's great. Let's talk just a little bit generally about the market. New markets coming online every election cycle. California is big and well established. Where are you looking next? Like, where do you think the next big sort of surge is going to be?
Well, I mean, it's funny. I think there's definitely enough growth potential in every existing market that keeps us excited about, every state that we're live in. Even looking at a state like Colorado that's had adult use recreation since, 2015, they set a record year last year when it came to cannabis sales. So it's not as though even these quote unquote mature industries have topped out when it comes to growth. I think there's tremendous potential in every single market. And, just given our focus in terms of working with existing businesses, we oftentimes are aware of new markets that, turn on adult use, but we're not in a position to be a first mover. And I don't think most operators are, because if you look at newer states like New York or New Jersey, they've approved an adult use market, but the internal regulations, the licensing application process, the actual local municipality ruling and regulations that need to be finalized. There's a whole host of steps that need to be taken before these markets really are in a position to actually just start doing what they're supposed to be doing, which is actual production of goods and selling it to customers. So for us, just given our focus, we don't think there's any market where, we sort of done all the work we can do and it's on to the next horizon. We look at it as the horizon just keeps expanding for us, right? And, it's exciting, but it definitely has been a very busy couple of years for us. And I expect that pace to only increase going forward.
Yeah, absolutely. That's really good points. Let's play forecasting here a little bit. With the Cannabis Administration and Opportunity Act in the review stage, lots of discussions about legalization. What's your just personal sense? How are we looking here? Do you see legalization? What kind of timeline are you looking at? Are you expecting?
Yeah, I mean, it's funny. After the U.S. elections last year, I think people that only casually observed the industry had this sense that, legalization was right around the corner. Like the second that Biden got into office, that legalization would be here. And that always seemed far too optimistic for us. Deregulation does not mean no regulation, right? And from a federal level, it's very hard for, a legislative act like what, Chuck Schumer and Cory Booker have put in front of the Senate to really solve all your problems with a single stroke of the pen. And for us, we'd say that's probably the least realistic path forward. My personal take is that over the next 12 months, it's very reasonable to see some softening around the edges through something like the Safe Banking Act being passed. And even that, I don't think comes from, any sort of altruistic standpoint from the government. I think it's more, from a taxing perspective, the quicker you can remove the cash element, the quicker the IRS can decide who owes them what. So I think having some nominal changes in that regard would be hugely impactful for the industry. And it's reasonable to expect that happens at some point in the next, call it 12 months or so. Federal legalization or a descheduling from Schedule 1, I don't expect any of that to really gain traction until we enter into the next presidential election cycle. So I think as you approach 2024, cannabis is probably a really good issue for Democrats to rally around. It's pro-jobs, it's pro-liberal beliefs and concepts. It's ending the war on drugs and, reducing the incarceration of nonviolent people in this country. And so, I think from a much more significant move in terms of deschedulation or outright legalization, I think you're probably a couple years away from that. Just given there's so many things going on in this world, it's hard to prioritize on this. But that being said, what legalization looks like can happen in a variety of ways. One thing that people don't consider is that I don't expect us to get into a state where interstate commerce is allowed. And I don't expect the federal government to introduce legislation that conforms to the 35 different sets of state regulation when it comes to cannabis. I think the federal government basically says it's a state's issue, operate with whatever your local regulation is. We'll just tax you accordingly with the result of it. And ultimately, I think a lot of the support that you see in the House of Representatives or in the Senate, all the support for cannabis legalization on a federal level would really drop if interstate commerce was allowed. I don't think any of these representatives or senators want to see their local cannabis economies really get blown up by, out of state operations, which can be more efficient in terms of production. And I think generally that's a good thing. I think it's good to undo this part of the war on drugs by allowing these local communities to really thrive and enjoy some of the economic benefit. What you don't want is that opportunity to be displaced from these environments because, every single place in this country has been negatively impacted by this prohibition. And so I think every single part of this country should be allowed to participate in the growth of this industry going forward.
That's a really interesting perspective I hadn't heard before. There's this assumption that with federal legalization, interstate commerce is just going to naturally follow. But you actually not only think that that's not going to happen, but it's actually advantageous to the industry to let these sort of micro economies continue to sort of thrive.
Yeah, I mean, it's funny, I have friends, like if we go to a new city or we go to a new area, you want to go see what the local craft brewery is, or you want to go have whatever like the local cuisine is. And I think, cannabis as a craft commodity is no different. I mean, obviously, you will have larger players, you will have MSOs, you want consumers that want just, the same product and the same experience regardless of where they are. But, what I'm a fan of is choice in the market, right? And in order to protect the local smaller players, you really need to embed that sense of competition and the ability for these smaller companies to exist. And that's very, very hard to do if you're working at a national scale where, you can have cultivation that's done much more efficiently in one part of the country. You can have manufacturing that's different. Distribution is its own beast. But for me, it's, it would be a shame if everything just went the way of large MSOs or large conglomerates that really monopolize the industry. I just think, we get much better results as citizens and as consumers, the more that there is competition in the space.
Yeah, that's a really good point. And, cannabis is unique, or at least different from the booze and the beer and alcohol, because there is that almost wine-like terroir capacity of, the Northern California sun-grown versus what you'll find in other states. And so, yeah, it really lets those areas develop their own, nuances and characteristics. But that brings up a good point as well. What is the sort of general profile size-wise of clients that come to you? You mentioned sort of middle market, not startups, but where are they sort of in the scale?
Yeah, I mean, I'd say, our client base, again, it's a pretty diverse set. We have operators that have, turned online in the past year, and we have operators that have been active since the medicinal market. There's a couple different ways to characterize them, but from a top line revenue basis, I'd say we work with companies on the smaller side that are close to that, $10 to $15 million in annual revenue. And on the larger side, north of $100 million. And, regardless of where you fall into in between that broad range, like I said, the growth potential and the opportunity in the industry is so prevalent that, none of these operators are basically resting on their laurels or not looking at opportunity. And so it's always a fruitful conversation whenever they approach us, just to understand how we can help take them to that next level.
Yeah, absolutely. So we're coming up to the end of our time here. I just wanted to give you an opportunity. Is there anything, any message you want to give our audience or that you want to close with?
I mean, really, it's a lot of what we discussed. I think companies like GreenGrowth do a tremendous service to the industry, and we have this conversation a lot with applicants that approach us with numbers that we can't really do anything with. And one, I just want to say thanks for having me and starting this web series. I think the more information that's available, the more these operators are empowered, and the same goes for services. And so my message to operators that are watching this would be that it's definitely an investment. It's definitely probably not as exciting as what your day-to-day function is, but it's so vital to highlight and transfer the message of what your company's doing. So I'd highly recommend anyone who hasn't sort of taken that step to have internal controls to really move towards that direction. And there's obviously very qualified companies out there that you can speak with, GreenGrowth being one of them. And so I just highly encourage anyone that's in that position to really double down and focus on those internal procedures, and don't let it fall to the wayside, because it will be a very limiting factor in the near term.
Yeah, we really appreciate that. Yeah, and that's kind of our message too, is that let us handle the numbers. Let us deal with the tax compliance. Unless you're passionate about those things, then sure, more power to you. But if you're not, hiring someone like us gives you the time to focus on the areas of your business that you are passionate about, you are excited about. If you're in retail, you can spend more time on the floor working with customers. You're not in the back room crunching numbers. So we really appreciate the shout out there. And and we love working with you as well. So often we're working, we're in the intimate knowledge of our clients back in the financials, and we know how difficult it is to get capital and raise your build your scale and build your business. And so we love working with guys like you, who are really providing an essential service and helping the industry grow in a smart way. So
appreciate that.
Yeah, well, thank you so much for joining us today, and we'll talk soon. Thank you so much.
Thanks, Chris. Thank you.
All right. Bye.